3 investments that can turn $100 into $10,000. I watched my bank account hit 0 3 times before I figured out what separates people who turn $100 into $10,000 from those who lose everything trying. The difference isn't luck. It isn't some secret formula the rich are hiding from you. And it definitely isn't what your financial advisor will ever tell you in their air-conditioned office. What I'm about to share with you made me physically sick the first time I pressed that buy button. My hand literally shaking over my phone screen at 2 in the morning, knowing that the money I was about to risk was supposed to pay for groceries that week. But here's the thing that keeps me awake sometimes. The thing that makes my stomach turn even now when I think about it. Some of the people who followed this exact path are driving cars they never dreamed of owning, while others lost everything and had to move back in with their parents. The question that should be burning in your mind right now is simple. Which group are you going to end up in? Because what I'm going to walk you through isn't theory, it isn't some guru's course material. It's the actual battlefield where small money either multiplies or disappears. And you need to know exactly what you're walking into before you make a decision that could change everything about your financial future or destroy it completely. These 3 investments exist in a space most people are too afraid to even look at. And maybe that fear is exactly what's been protecting you. Or maybe it's what's been keeping you broke. Let me be crystal clear about something before we go any further, because I need you to understand this with absolute certainty. What I'm about to tell you could genuinely ruin your life if you approach it the wrong way. I'm not being dramatic. I'm not trying to scare you for effect. I'm telling you that I've seen people lose their homes over this. I've watched marriages end because someone bet money they couldn't afford to lose on investments they didn't understand, convinced they were about to become the next success story. So right now, before I say another word about how to potentially multiply your money, I need you to make yourself a promise. You will only invest money you can afford to lose completely. Money that if it vanished tomorrow wouldn't make you miss a rent payment, wouldn't make your kids go without something they need, wouldn't force you to choose between medication and food. If you can't make that promise to yourself right now, if you're sitting here thinking about using your emergency fund or money you owe to someone else, then I'm begging you to stop watching this video and come back when your financial situation is different. But if you've got $100 that's truly expendable, money you are going to waste anyway on things you'll forget about in a week, then what comes next might be the most important financial information you'll hear this year. And honestly, it scares me a little that you're still watching, because part of me wonders if you're really ready for this. And listen, if what I'm sharing here makes you think differently about where your money could be working for you instead of just sitting there losing value to inflation, do me a favor and hit that like button, because it genuinely helps me reach more people who need to hear the truth about these opportunities that exist outside the traditional investment world that your bank will never mention. And subscribe, because I'm going to be breaking down more of these real-world money strategies that actually work for regular people, not just the ones who already have $50,000 sitting in their brokerage account. I'm not here to sell you a course. I'm not promoting some app that's paying me. I'm just sharing what actually works in the real world, where most of us are starting with almost nothing and trying to build something. So let's get into the first investment that has the genuine potential to turn your $100 into $10,000. But first, you need to understand why this opportunity even exists in the first place. See, traditional markets are efficient, meaning by the time you hear about a good opportunity, 1,000 other people already took advantage of it, and the moment has passed. But there are certain assets that exist in spaces so volatile, so misunderstood, and frankly so dangerous that most institutional investors won't touch them, which creates these pockets of extreme opportunity for individuals willing to take on extreme risk. The first investment is cryptocurrency altcoins. And I can already feel some of you rolling your eyes, thinking this is just another crypto bro telling you to buy some meme coin. But hold on, because what I'm about to explain is different from what 99% of people screaming about crypto actually understand. When I say altcoins, I'm not talking about Bitcoin. I'm not even really talking about Ethereum. I'm talking about smaller market cap cryptocurrencies that are working on legitimate technological problems and are currently valued at almost nothing, because nobody's paying attention yet. Here's what makes this so dangerous and so potentially profitable at the same time. A coin that's trading at 8 cents could go to $8 if the project succeeds, That's 100 times return, which turns your $100 into 10,000. But that same coin could also go to zero, completely worthless, and you'd lose everything. The question you have to ask yourself is, how do you find the legitimate projects in an ocean of scams, pump and dump schemes, and outright fraud? Because, let me tell you something that nobody wants to admit, most altcoins are garbage. Most of them are designed specifically to take money from people exactly like you and me, and transfer it to people who got in earlier, or who created the project in the first place. So how do you separate the real opportunities from the traps? You research like your financial life depends on it, because it does. You're looking for projects with actual technology, real-world use cases that solve genuine problems, transparent development teams who show their faces and have legitimate backgrounds you can verify, and community engagement that looks organic rather than paid shills flooding social media. You read the white paper, and if you don't understand it, you learn enough to understand it. Because investing in something you don't comprehend is just gambling with extra steps. You check the tokenomics, understanding how many coins exist, how they're distributed, whether the team has a massive allocation they could dump on the market the second the price rises. You look at the trading volume, because a coin might show a great price on paper, but if nobody's actually buying or selling it, you could find yourself unable to exit your position when you need to. And here's the part that makes my hands sweat, even thinking about it. You have to be prepared to watch your $100 turn into $30 before it potentially turns into $10,000. The volatility in this space is absolutely brutal. We're talking 20, 30, even 50% swings in a single day. Can you handle watching your investment cut in half overnight and not panic sell? Because that's what separates the people who make life-changing money from the ones who buy high and sell low, losing everything in the process. I remember the first altcoin I bought that actually worked out. I put in $200, which was more than I should have risked, honestly. And within a week it was down to $80. I couldn't sleep. I kept checking my phone every hour, watching the number get smaller, feeling like an absolute idiot for throwing away money I'd worked hard for. My girlfriend at the time thought I'd lost my mind, and maybe I had. But I'd done my research. I believed in the technology, and I held on even though everything in my body was screaming at me to sell and cut my losses. 3 months later, that $80 had turned into $4,000, and I sold half, taking out my initial investment plus a nice profit and let the rest ride. That remaining position eventually went to $11,000 before the project started facing regulatory issues and I got out completely. But here's what haunts me about that experience. I got lucky on the timing, I got lucky that the project was legitimate, and I got lucky that I didn't need that money desperately during the time it was down. If any one of those factors had been different, I could have lost everything and had a very different story to tell you right now. So, when you're considering altcoins, you have to ask yourself honestly, am I investing based on research and conviction, or am I gambling based on hope and desperation? Because the market doesn't care about your intentions, it only cares about supply and demand, and it will take your money without a second thought if you're not careful. The second investment that can turn $100 into $10,000 is options trading. Specifically buying call options on stocks you believe are about to make significant upward moves. Now, if altcoins scared you, this should terrify you, because options are legitimately one of the fastest ways to lose money in the financial markets if you don't know what you're doing. But they're also one of the only ways a small amount of capital can generate massive returns in a short period of time, which is exactly why they're so dangerous and so attractive at the same time. Here's how it works in the simplest terms I can explain. When you buy a call option, you're purchasing the right, not the obligation, to buy a stock at a specific price before a specific date. You're not buying the stock itself, you're buying a contract that gives you the option to buy the stock. The contract has value based on how likely it is that the stock will reach the price you specified. And if the stock makes a big move in the direction you predicted, the value of your option can increase by hundreds or even thousands of percent. That's how a $100 investment can turn into $10,000. You're leveraging a small amount of money to control a much larger position. And if you're right about the direction and timing, the returns are exponential. But here's the nightmare scenario that happens to most beginners who try options trading. They buy a call option on a stock they think is going to go up, They picked a date a few weeks away, and they're feeling confident about their research. The stock does go up, but not fast enough, or not quite high enough, or it goes up and then comes back down before the expiration date. And when that expiration date hits, if the stock isn't above your strike price by enough to make the option valuable, your contract expires worthless and your entire investment disappears. Not most of it, not some of it, all of it, 100% loss. This happens to people every single day. And it's why experienced traders say that most options expire worthless, meaning most people who buy them lose their entire investment. So why am I even telling you about this if it's so risky? Because the people who understand options, who know how to pick the right strikes, the right expiration dates, who understand implied volatility and time decay, and all the mechanics that make options work, those people can turn small amounts of money into massive returns with calculated risk. The key word there is calculated. This isn't throwing darts at a board. This is analyzing charts, understanding market sentiment, timing entries and exits with precision, and having the discipline to cut losses when you're wrong, instead of holding on to a dying position, hoping for a miracle that never comes. Let me give you a real example of how this can work and how it can fail, and you tell me which story sounds more like what would happen to you. Story 1. A trader notices that a tech company is about to announce earnings and believes, based on their analysis of revenue trends, user growth, and market conditions, that the stock is going to beat expectations significantly. They buy call options expiring just after the earnings announcement, positioned to profit if the stock jumps. The company announces earnings, beats on every metric, the stock gaps up 20% in after-hours trading, and those options that cost $100 are now worth $3,000 when the market opens the next morning. The trader sells immediately, takes the profit, and walks away with a massive win. Story 2. A trader hears on social media that some stock is about to explode. Everyone's talking about it. The momentum seems real. They buy call options without understanding what strike price makes sense, or how far away the expiration should be. They just know they want to be part of the action. The stock does move up a little, but not enough, or it moves up but then crashes back down, or it just trades sideways while time decay eats away at the value of the option. Expiration day comes, the option is worthless, $100 is gone forever. Which of those scenarios is more likely for someone who's never traded options before? Be honest with yourself, because your honest answer will tell you whether you're ready for this or not. The learning curve for options is steep, brutally steep, and most people pay their tuition to the market in the form of lost capital before they figure out what they're doing. If you're going to go down this path, you need to paper trade first, using a simulator where you practice with fake money until you can consistently make profitable trades. And even then, your first real trades should be small, treating them as education expenses rather than investments you expect to win on. You need to understand the Greeks, delta, gamma, theta, vega. These aren't just random letters, they're measurements of how your option's value will change based on different factors, and if you don't know what they mean, you're flying blind. You need to accept that you're going to lose money while you learn probably a lot of money, and you have to decide if that education is worth the cost. Some people spend thousands on courses or seminars about options trading. You could spend that same amount making real trades and learning through experience. But either way, there's a cost to gaining this knowledge. Nothing is free. And here's the thing that makes my chest tight just thinking about it. Even experienced options traders lose money regularly. They just win bigger and more often than they lose, so their overall account grows. But if you're starting with just $100, you don't have room for multiple losses before you're out of capital completely, which means your margin for error is essentially zero. The third investment, and this is the one that makes me most nervous to even mention because it's so speculative and controversial, is penny stocks from emerging sectors that are about to explode into mainstream adoption. When I say penny stocks, I'm talking about legitimate companies trading under $5 per share, sometimes under $1, that are working in industries about to experience massive growth. These aren't the scam stocks you see promoted in spam emails. These are real companies with actual products or services that are currently unknown or undervalued because they're small, they're risky, or they're in industries that haven't captured mainstream attention yet. The potential here is obvious. If you buy a stock at 50 cents and it goes to $50 because the company succeeds and the industry explodes, you've just turned $100 into 10,000. But the risk is equally obvious. Most small companies fail. Most penny stocks are extremely volatile and thinly traded, and the potential for manipulation or fraud is significantly higher than with established companies. So how do you find legitimate opportunities in this space? You're looking for companies with real revenue, not just ideas or promises, with management teams that have track records you can verify, operating in industries that are showing clear signs of imminent growth based on technological advancement, regulatory changes, or shifting consumer behavior. Let me tell you about a penny stock play that worked and one that didn't, because you need to see both sides of this equation. A few years ago, I found a small company trading at 90 cents that was developing technology for the renewable energy sector, specifically a component that made solar panels more efficient at a lower cost. They had patents, they had partnerships with larger companies starting to form, and they had revenue that was small but growing quarter over quarter. The renewable energy industry was clearly about to expand massively due to government incentives and changing public opinion, but this particular company was too small for most investors to notice. I put in $500, which again was probably more than I should have risked, and I watched that position for 8 months. The stock did nothing for the first 6 months, just bounced between 80 cents and $1.20, making me question whether I'd made a mistake. Then they announced a major contract with a large solar installation company, and the stock jumped to $3 in a week. I sold half my position, locking in a gain of over 300% on that portion. The remaining shares I held for another year, and they eventually went to $7 before I sold everything, turning that initial $500 into several thousand. That's the dream scenario, finding an unknown company before everyone else does, and riding it up as it gets discovered. But let me tell you about the one that went the other way, because this is where the real education happens. I found a biotech penny stock trading at 30 cents. They claimed to be developing a revolutionary treatment for a common condition. They had some clinical trial data that looked promising to my untrained eye, and the charts looked like the stock was about to break out. I put in $300 without doing nearly enough research into the science behind their claims or the credibility of their research team. For a few weeks, the stock climbed to 45 cents, and I was feeling like a genius, up 50% in less than a month. Then the FDA sent them a letter questioning some of their trial methodology. The stock crashed to 12 cents in a single day, and I panic sold at 15 cents, losing more than half my investment. The stock eventually went to zero when the company couldn't secure additional funding and had to shut down. That loss hurt, not just financially but emotionally, because I knew I'd broken my own rules. I'd invested in something I didn't truly understand. I'd let greed override caution. And I'd sold in panic instead of having a clear exit strategy from the beginning. Every dollar I've made investing in high-risk assets came with a lesson from a dollar I lost, making stupid mistakes, and I need you to understand that you're probably going to pay that same tuition if you go down this road. The pattern you should be seeing across all three of these investments is that massive potential returns come with massive potential losses. And the difference between winning and losing isn't luck, it's research, discipline, timing, and emotional control. With penny stocks specifically, you're fighting against several disadvantages. You're competing against people with more information than you, you're trading in markets that are less regulated and more easily manipulated, and you're investing in companies that have higher failure rates than established businesses. So why would anyone take this risk? Because if you can identify truly undervalued companies before the market does, the returns can be absolutely life-changing in a way that putting $100 in an index fund never will be. An index fund might give you 8% a year, turning your $100 into $108, which is great for long-term wealth building, but it's not going to change your life tomorrow. These high-risk investments give you a chance, just a chance, to multiply your money by 10 or 100 times in months or years instead of decades. But you have to go into this with your eyes wide open, knowing that most likely you're going to lose some or all of your money while you're learning, and you have to be okay with that outcome before you risk a single dollar. Now here's the part where I need to get really serious with you, more serious than I've been this entire time, because I can feel some of you getting excited about these possibilities, and I need to pump the brakes hard. Everything I've told you about these three investments is true, The potential is real. People do turn small amounts of money into large amounts using exactly these methods. But for every person who succeeds, there are dozens or hundreds who fail, who lose everything they put in, who make emotional decisions at exactly the wrong time, who get scammed by people smarter and more ruthless than they are. The financial world is not fair. It's not designed to help you win, and it definitely doesn't care about your dreams or your struggles. Markets are war zones where big money uses advantages. You don't have to take money from people who don't know what they're doing. And if you walk into that war zone unprepared, you're going to get destroyed. I'm not saying this to discourage you. I'm saying this because I respect you enough to tell you the truth instead of selling you a fantasy. If you're going to pursue any of these investment strategies, you need to educate yourself relentlessly. You need to start smaller than you think you should. And you need to be prepared to lose everything you put in without it affecting your actual life. Let me tell you what a proper approach to this looks like, because I don't want you to walk away from this video and immediately dump your last $100 into some random cryptocurrency you saw mentioned on Twitter. First, you take that $100 and you split it. Put 50 into education, buying books, taking legitimate courses from people who actually trade these markets successfully, learning the fundamentals until you can explain them to someone else. Put the other 50 aside and tell yourself you can't touch it until you've spent at least a month studying and paper trading. When you finally make your first real investment, you should understand exactly why you're making it, what your thesis is, what would prove you wrong, and at what point you'll exit whether you're winning or losing. You should have this written down, not just in your head, because emotions will make you forget your plan the second money is on the line. You should expect your first several trades to lose money, because you're still learning and the market is a brutal teacher. And you should never, ever add more money until you've proven to yourself that you can manage the money you already have in the market without making emotional decisions. The biggest mistake I see people make, and I made this mistake myself, so I'm speaking from experience, is treating high-risk investing like a lottery ticket. They put in money they can't afford to lose, they pick investments based on hype or tips from strangers online, and then they obsess over the position, checking it constantly, making impulsive decisions based on short-term price movements. This is not investing. This is gambling with anxiety, and it's a recipe for disaster. Real investing, even high-risk investing, is boring most of the time. You do your research, you make your decision based on logic and analysis, you enter your position, you set your rules for when you'll exit, and then you wait. You don't check it every 5 minutes. You don't change your plan based on fear or greed. You execute your strategy and let the results play out. If you can't do that, if you know you're going to be an emotional mess the second your money is at risk, then you're not ready for this type of investing and you should stick to safer strategies until you develop the emotional discipline this requires. And there's no shame in that. Most people don't have the temperament for high-risk investing, which is exactly why most people don't get the high returns that come with it. There's something else I need to address that makes me uncomfortable, but it's important. Some of you watching this are in desperate financial situations, and you're looking at these investment strategies as a way out. You're behind on bills, you're drowning in debt, you've got family depending on you, and you're thinking that if you could just turn $100 into $10,000, it would solve everything. I understand that desperation. I've been there. I know what it feels like to need money so badly that you're willing to take massive risks to get it. But I need you to hear this. High-risk investing from a place of desperation is almost guaranteed to fail. When you need the money, when your survival depends on winning, you can't make rational decisions. You'll hold losing positions too long because you can't accept the loss. You'll sell winning positions too early because you desperately need to realize the gain. And you'll take stupid risks because you feel like you have nothing to lose. The people who succeed at this type of investing are the ones who don't need the money, who can be objective about their decisions, who can cut losses without it hurting their life. So if you're in a desperate situation, I'm telling you with all the honesty I have that you should not be investing in high-risk assets. You should be focused on increasing your income, decreasing your expenses, and building stability. I know that's not what you want to hear, but it's what you need to hear. For those of you who are in a position to actually take on this kind of risk appropriately, who have your basic financial life handled, and truly have expendable capital you can afford to lose, let me give you some final practical advice that might save you from expensive mistakes. First, never invest in something because someone on the internet told you to, including me. Everything I've shared here should be a starting point for your own research, not a recommendation to go buy specific assets. Second, diversify, even within high-risk investing. Don't put all your risk capital into one cryptocurrency or one options trade or one penny stock. Spread it across multiple positions so one complete loss doesn't wipe you out entirely. Third, take profits. If an investment goes up significantly, sell some of it. Take your initial investment off the table and let the rest ride with house money. I can't tell you how many times I've watched gains disappear because I got greedy and didn't lock in profits when I had the chance. Fourth, set stop losses, or at least have clear mental lines where you'll exit a losing position. Don't let hope turn a small loss into a catastrophic one. And fifth, keep learning. The markets change, new opportunities emerge, old strategies stop working, and you need to keep educating yourself constantly if you want to stay ahead. I want to address something that might be going through your mind right now. You might be thinking that I'm contradicting myself, warning you about all these risks while also telling you about the potential for massive returns. But that's exactly the point. Both things are true simultaneously. These investments really can transform small amounts of money into large amounts, and they really can destroy your capital if approached incorrectly. The opportunity and the danger are two sides of the same coin, and pretending either one doesn't exist would be dishonest. My goal here isn't to convince you to invest or not invest in these assets. My goal is to give you the complete picture so you can make an informed decision based on your own situation, risk tolerance, and financial goals. Some of you will hear everything I've said and decide this isn't for you, that you'd rather build wealth slowly through traditional methods, and that's completely valid. Others will decide that you're willing to take on the risk in exchange for the potential reward, and that's valid too, as long as you go in with realistic expectations. What's not valid is going in blind, risking money you can't afford to lose, or believing that success is guaranteed if you just find the right asset, because that's how people get financially destroyed. So here's where we end up after everything I've shared with you. Yes, it's possible to turn $100 into $10,000 through cryptocurrency altcoins, options trading, or penny stocks from emerging sectors. It happens. I've done it. Other people have done it. The mathematical potential is absolutely real. But it requires research, discipline, emotional control, proper risk management, and honestly a bit of luck in terms of timing. Most people who try this will lose money, at least initially, and many will never develop the skills or temperament to succeed at it. The question isn't whether these opportunities exist, they do. The question is whether you specifically, with your current knowledge, discipline, and financial situation, are in a position to pursue them without causing damage to your life. Only you can answer that question honestly. What I can tell you is that if you decide to go down this path, do it right, educate yourself first, start small, expect to lose while you're learning, and never risk money that you need for actual life expenses. The potential is real, but so is the danger, and respecting both equally is what separates people who build wealth from people who destroy their financial lives chasing dreams. If this video made you think differently about where opportunity exists in the financial markets, hit that subscribe button. Because I'm going to keep breaking down real strategies that work in the real world. Smash the like button if you appreciate the honesty, even when it's uncomfortable to hear. And drop a comment below telling me what you think, even if you completely disagree with everything I said. I want to hear your perspective because these conversations are how we all learn and get better. What's your take on high-risk investing? Are these legitimate opportunities or dangerous traps? Let me know below.